Pralay Mondal, MD and CEO of Catholic Syrian Bank, who's joining us now on the show. Pralay, thank you so much for your time. Your first quarter updates of the business were pretty impressive. The question coming to everybody's mind and your shareholders, and I understand a lot of new shareholders have come in the last quarter. Some smart money has actually accumulating your stock. Is that what kind of growth do we foresee on a sustainable basis? We all know that credit growth environment, the tailwinds are strong, but the areas you are focusing on, how sustainable is the growth and what are you targeting internally?
Thank you, Ajay, and thank you for having me on your show and your viewers. Coming to credit growth, I think we have sustained the same credit growth we had last quarter on a year-on-year basis. And we think that we'll be able to sustain the similar kind of a growth going ahead in the year as well. Generally, first quarter is a little soft, but I think we sustained the first quarter reasonably well. But as we go into the next quarters, our new products and new businesses will start to do a little better. Our SME business is coming up now, and our retail business will start doing even better. So to that extent, I'm not so worried on the credit growth at this point of time.
No, you're not worried about the credit growth. I understand that. But are you very confident that this 30% plus kind of growth rate will continue, A? And secondly, is it going to continue through the gold loans? Because this time around as well, that was the one which showed the outperformance with 40% growth.
Anisha, you're right that our gold loan has been our mainstay. But as you know that we are building various other businesses and products, and I'll just give you a brief on that. But quickly on your question, I have always said that we'll grow 30 to 50% faster than the system. I think we exactly don't know the system numbers right now, but I think we have sustained that and we should be able to sustain that. Whether it is 25, 30 or 35, I can't comment on that right now, but all I can tell you is that we will go for aggressive credit growth. And we'll also ensure that our liability business starts picking up Q2 onwards to fund that business growth as well. Coming to gold loan, yes, it has shown a 42% growth year-on-year basis. But this is actually on a compared to last quarter, we had even higher year-on-year basis gold loan growth. So to that extent, you will see some of the other businesses like retail, SME, wholesale, all are starting to pick up a little better, and we will have a better mix. But the bigger story for the bank is the way we are building up the technology processes, leadership, and some of the other products and services. So by FY25, once we have our entire core system and the entire surround system in play, and a lot of that is in the UAT and LMS, LIS, all of these rollouts are happening. We will be a fully universal pan-India. As you know, our branch network is now growing. We have grown by more than 100 last year in the last 1 year. So 60% of those branches are in North and West. So to that extent, we are building up our entire franchise in a very different way. So we will be doing well in gold loan, but the other parts of the business will continue to grow.
Pralay, I remember when you had come in, at the bank, you had indicated that the idea would be to build or expand the retail franchise of CSB, go inroads on the SME side and work on branches and distribution. And I want to understand how's the ground covered so far. And if I were to break your loan book into one is legacy book, which was gold loan tilted, and the book which you're aiming to build from here on the back of the initiative that you had promised us, how is it panning out?
It's panning out extremely well. As you know, neither a bank nor a franchise can be built overnight. So one has to look at the building blocks. Now, on the building blocks, what are the things we have done? We have created verticalization. We are putting all systems in place. Our entire technology, I can put it this way, whatever was technology in the bank 2 years back won't be there 2 years from now. So that's the way we are revamping the entire technology. The amount of investments we are putting into technology is unprecedented in this bank. And without that, you cannot build businesses like SME, transaction banking, retail, and all of that stuff. We have got in the right leadership here. We are putting new products in place. So all the building blocks are in place. And the most important thing is customers. Because if you have to build the retail asset business, and as you know, there are various noises on retail asset business, especially on the unsecured side. And if you want to build it up, you need to be cautious because you don't want to catch the tail in any potential cycle going ahead. I'm not saying there will be a cycle, but we don't want to take that risk. So to that extent, we are doing the plumbing work at this point of time so that as and when the right time comes, we'll take off. But the most important thing is getting customers. So we are building a liability franchise through which we will create a sales structure where a lot of new customers will double our customer acquisition this year, and we'll continue to double that for the next few years. And that will become the basic mainstay of all this. But we cannot ignore the gold loan because its risk weights are low, delinquency is almost non-existent, the cost is already baked in. So if you sweat that system well, we'll get the right revenue, and that will help us in investing into these businesses. So these are building blocks, as we know. But SBS 2030, as you know, that by 2030 vision, our 20% will be gold loan in the mix, 30% will be retail, 20% will be SME, and 30% will be wholesale and others. And that remains intact. And there is absolutely no going away from that. So that is broadly what our strategy is.
Idea is to tilt a bit away from gold into the SME and the wholesale book as well. But Mr. Mondal, also wanted to get a take regarding the profitability, in the sense that the net interest margins had taken a sharp knock. How's that expected to trend going forward? And what are the internal targets with respect to where the return on asset ratio could be?
So if you look at last quarter, because right now we can't really talk about the financials numbers, that will only know after 20th of July when we announce our results. But trending the way it is going, it's very, very clear that profitability will be sustained at a similar kind of a level going ahead. And last year we grew our profitability by 20% year on year. I don't see too much of a difference going from there. It can be a few percentage points here and there. And on the NIM, yes, I had already said that we are happy with any NIM between 5 to 5.5. It will be difficult to return at 5.5, but we will not go below 5 at this stage. But eventually, anything between 4.5, 5 is also a great NIM. The best banks are in that range. So we are quite happy with a 5% kind of a NIM going ahead. And we should be able to do slightly better than that this year. On the ROA, I think last year we are somewhere around 2.2. I think we should be able to sustain somewhere between 1.8 to between 1.8 to 2. But our longer term journey, I've always said that 1.5 to 1.8 with a bias closer to 1.8 is not a bad ROA to be in, provided we are able to sustain this growth in the long run. Growth is our main focus. Rest of the ratios will sustain at these levels, which I've already communicated in past.
Mr. Mondal, just last one question from my end. And there are these reports which are always coming up with respect to IDBI Bank and CSB being one of the potential bidders for the same. Could you clarify?
At least as an MD of CSB, I am not aware of anything which we are even discussing internally as a potential bidder. But Fairfax is an investor into the bank. What is in their domain? What are they thinking? I can't comment on that. I also read in media. But purely from a CSB Bank management perspective, we don't even discuss that internally.
Right. We also understand that you are taking a lot of initiatives for a complete overhauling of sorts of your technology backbone of the bank, and also outreach, the customer end. So front end as well as back end is being overhauled on technology. I mean, the number which I gather is almost 500 crore kind of number over a phase, which may be very large for a size of your bank. What are you up to as far as technology upgradation is concerned?
Yeah, the truth is that if you don't have technology, you can't build a large bank in the long run. And our vision is not to remain a niche bank. We want to be a mid-sector bank by 2030. And then we want to aim even higher and enter into the larger sector in the next decade. So if you have to do that, we have to invest now. We don't have a choice. And the joy in investing now with keeping the ratios intact is immense. And that's exactly what the management is motivated towards, because we are a listed bank. We can't have the ratios too much. And that means that we have to build the revenue channel right. So our third-party business, for example, has done extremely well. Our core non-interest income to total income has significantly grown. Gold loan has given us a tremendous amount of impetus towards this kind of investments. And the number you said, I'm not kind of confirming that number. It may be higher than that also. I don't know. But from that perspective, but technology has one good thing is it is some is OPEX and mostly is CAPEX, so it doesn't hit the P&L right away. But a lot of these investments which you're talking of will go in the next 15 to 18 months. And then we will leverage this with a payback period. And hence our cost to income will start going down. And I've said in past that we will move towards a cost to income of 45% by 2030. But right now, it can be in the same range where we are and maybe slightly more elevated. But that doesn't worry us too much because investing into the bank is what will take the bank into the future.
Investing into the future, and that vision has been laid out. Thank you, Mr. Mondal, for joining us today, and all the best with execution of all of that as well, because for now it looks like a lot of levers are in place for growth going forward.